Joining me now on the floor of the New York Stock Exchange is Shark Tank star Kevin O'Leary, chairman of O-Shares ETF Investments. Kevin, it's great to have you back.
Great to be here, Scott.
So you're launching a new ETF. It's called the O-Shares Global Internet Giants Index. What's in it?
Well, think of it this way. We know stateside how disruptive Amazon and other internet providers have been to e-commerce and just to global growth. These companies are growing at 20–30% a year. But who's doing that in South America? Who's doing it in Europe? Who's doing it in China? There's no global index that lets me invest in all the companies that are doing this in all the different geographies. It turns out there's over 50 players that are doing it all around the world, and I wanted to create an index where I could make one investment ticker, OGIG, be a place where I can invest in all the global players. So companies you've never heard of, Mercado Libre in South America, doing what Amazon does in the United States. Who knew? Growing at over 30% a year. Those are the kind of things that are so interesting. We've really built this index around hyper growth, finding the companies with good balance sheets that are growing 20–30% a year, put them into one ETF. It's the first of its kind as far as I could tell. There's no other way to invest globally in the disruption of what e-commerce is doing globally.
But plenty of names that we have heard of, like Amazon, Alphabet, Facebook. Now, there's plenty of concerns about regulation when it comes to these companies. Is that on your radar at all?
Of course it is, but you can't hold back the growth. The genie's out of the bottle, Scott, on e-commerce and on the internet as a service provider for all things consumers love. This is a way to crystallize your exposure globally, because if you're in an economy like China that's growing twice as fast as we are, you want the internet providers there. You want all of those Tencents and the Waymos and everybody else that's doing that stuff in China. And this is a way to do it. So yes, we've got all the classic names in this ETF. You've got Facebook, you've got everybody else, Google, you know, Microsoft and the cloud services, they're all there. But how do you get their equivalents everywhere else? This is how you do it.
And the bulk of the companies in the index have to do with internet software and services. And anyone who follows you knows you love cash flow, you love a steady stream of revenue.
I love a steady stream of revenue, but I love growth. This is a way to put growth into a portfolio in the fastest growing sector of the world's economy, internet and e-commerce. These companies blew me away when we started doing the filtering on what the growth metrics are. Some of these Asian companies, 25, 27, 30% growth a year. That's incredible.
Let's also talk about the broader markets. You know, last week we were worried about Italy's political uncertainty, trade worries, then we got that stellar jobs report for May, and now we're back up in the markets. How would you characterize stocks right now?
Well, everything old is new again. We've got volatility back, Scott, just like we used to have 10 years ago. You got volatility coming through the news channels. At the end of the day, I look at it this way. Let's take Italy, 12th largest economy on earth, changes its government every 18 months. Always does. That's the nature of what Italians are. That's why we love them. But the economy continues to grow. I don't think they're going to leave the euro, because what Italian would want to wake up and find lira back in their account in the bank? They'd rather stick with euro. So I'm going to bet that that's going to be less of a problem than people think, and it'll work itself out as it always does in Italy. Core growth global, I think, is intact. Yes, there's a lot of negotiating going on with the Trump trade issues, but at the end of the day, look at the domestic economy, which is another reason to think about putting more into mid-caps while we're talking about it, which is OUSM, an index you and I talked about a year ago. Now it's in the market and it captures all the great US companies that aren't affected by trade issues because they're all domestic sales.
You were ahead of so many analysts calling the rally in small and mid-cap stocks.
Well, I'm glad, you know, I'm not right all the time, but it's nice to get it right once in a while, because to me, I waited 6 months for that to work, and then all of a sudden the market woke up and said, these companies have fantastic change on regulation and on reduction in tax rates, cash flows are going up. So OUSM has 224 of the best small and mid-cap companies in America, and I think it's going to perform very, very well. Plus it has a really good cash flow and a div yield of over 2.2%.
Now, Kevin, it's been a rough ride for a stock we talk a lot about, Tesla. Elon Musk, of course, had that bizarre conference call a few weeks ago.
Yeah.
Are you bullish on Tesla? Are you expecting any kind of a turnaround here for Musk?
First of all, I bought one. My wife wanted one, my son wanted one. We bought the Gullwing X. It's a fantastic car. I love driving it. I would never buy the stock. I think that guy's a genius. I think what he's done is turned the car industry upside down, but it's not his fault that his stock trades at an insane valuation. One day people are going to realize, wait a minute, it's an automotive company, it should be trading at maybe 16, 17 PE, and that stock gets cut by 70%.
I also want to talk about volatility in Bitcoin, right? Prices are now at $7,500, a far cry from 20,000, which is what we saw 6 months ago. Is the hype finally fading for Bitcoin?
I think the reality of the regulators fading on all of these crypto stories, these things won't be real until they're compliant. I mean, if they're going to be used in exchange for a stock or something like that, it's got to be compliant, not just domestically, globally. I mean, there's no point in getting some kind of a radical platform that isn't compliant with regulators in every country. It's just not going to work, and I think investors are starting to figure that out. If it's a cheaper way to help small companies grow, it should be done in a regulatory, in an environment that's regulated. Then it'll work. I think that's the next phase for this whole crypto thing, is when regulators finally lay out the rules and let all the market play under those rules, just like we do right here in the stock exchange. These are regulated securities and everybody's happy.
And clearly blockchain has legs. There are a host of ETFs around companies with exposure to blockchain.
Sure, and now I want somebody to show me how you make money. Because blockchain is not a proprietary platform, it's a utility. It's no different than an ACH transfer as far as I'm concerned, with a better ledger. But that doesn't mean it'll necessarily make money for everybody. So I think all of this stuff boils down to the long-term free cash flow that these products are going to provide, or productivity enhancements. I'm willing to pay for that, but I'm always a skeptic until you show me the cash flow, Scott. You know that about me. I'm all about the cash flow.
All right, and Kevin, before we go, we know financial literacy is so important for you. You launched Beanstocks, an app last year that allows people, get this everyone, to buy a fraction of a share of stock. It was pretty revolutionary. Update us on the progress of that.
I'm so proud of Beanstocks. There's thousands and thousands of people that have downloaded the app that are learning about using stocks in a portfolio towards saving whatever they can save a week, $25, $35, $45, and building their own portfolios. If you're in your 20s, you should be putting aside 10% of your salary and investing it. The market will give you 6 or 7% a year. By the time you're in your 60s, you'll be a millionaire. That's the whole key to it. It's getting people used to what it means to be an investor. We're on the floor of the New York Stock Exchange. This has been, and it's celebrated for generations. You buy great American companies, you invest them over the long term, they pay you dividends, and that's how you retire. That's what Beanstocks lets you do at a really early age. That's the strategy.
All right, Kevin, we covered a lot. We'll leave it there. Thank you so much.
Thank you so much, Scott.
Thank you.